All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Find Jason on Patreon and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. And let's get into it this week. So a lot of news in the past week here. The government did pass the bill to reopen along with all the usual pork. And you can see last Monday, the futures gapped higher, really on Sunday night, rather. And on that kind of anticipation that they had the votes for that. And this was kind of an obvious sell the news because they didn't actually pass it until, I believe it was like Wednesday night, I think at like 7 o'clock. And of course, the futures, if we take a look at the ES here, the futures rallied. You can actually see, we'll just use like an intraday. They got a pop on that news right there. But, you know, this is kind of silly, right? Because we had already rallied on the news to begin with the gap Sunday night and rallied up. And of course, it didn't make a new high, and we ended up rolling over here to the downside. And a lot of other things going on here besides just the government reopening being kind of a sell the news. We do have, again, the kind of repo facility stuff popping back up. So the rates, SOFR did normalize a little bit. And you can see it's coming back in just a little bit now. But it did get back up to that upper bound at 0.12. So not a lot of wiggle room there. And again, right now, the market's starting to get a little tight here. Look at the 2-year yield, 3.61, effective Fed funds 3.87. So a December rate cut is pretty much off the table at this point. There's really no space for the Fed to cut. And that's making the market a little bit nervous here as there's problems in the repo market, right? And right now, the Fed over the weekend, they had where's my, we got a lot of headlines here. Yeah, they had a little emergency meeting over some, over with Wall Street funds over the lending facility. And you can see here, it's, hedge funds. And it's also in the kind of the foreign banks. We've talked about European bond yields before. And a lot of U.S. banks, specifically the big ones, JPM, things of that nature, Goldman, they have the most exposure to those. So there is clear and obvious funding stress here in the market. And as you can probably see on this chart too, more trouble with the momentum names, right? So first it was SoftBank selling Nvidia, not just taking profits, but the entire stake. And now Peter Thiel selling his entire stake. I mean, if there's anybody who's an insider, it's him. So definitely some problems here with the market here. Momentum names losing some steam. Banks are in a little bit of trouble here. Again, XLF down, KRE here. Possible little bear wedge breaking today as it is Monday here. And broker-dealer is also at the lows of the day. We've talked about this range for months now, and we just kind of gloss over it every week because, we've been in the range, right? And we're getting that range break there on the broker-dealers. Take a look at Goldman, Morgan Stanley, possible failed breakouts there. And then Blackstone, this is one that I've continued to watch, in a lot of trouble. BlackRock as well. So these mortgage rates, the 50-year bond, I guess they're probably saying that for a reason. So I personally, anecdotally, know a lot of mortgage lenders they're under stress right now, and property management firms. And it's not just the auto loans, things that Jefferies was in trouble for, which that chart still looks pretty bad as well. I mean, heck, you could even make a case you got a bear flag there on Jeffrey. So there you go, below those moving averages too. So we are seeing that funding stress here. And I've kind of theorized here that, we know they want to do QE, right? We know that's happening. And we know the balance sheet runoff is set to end December 1st. But to me, I think, just to put on the conspiracy hat, you can't, they're not going to do it with Micron at all-time highs, right? Look at Micron here. AMD, Nvidia, like we just talked about. I think you need an excuse to do it, and you need people that actually beg for QE, and that means more pain. So right now the S&P is struggling to hold that 50-day moving average, and we've hit it 1, 2, 3, 4, now 5 times in the last couple of weeks, whereas prior we hadn't touched it since the gap up in May. So we definitely have some momentum declining here, and I think the market is susceptible down to a 64.50 area currently. I know that's pretty shallow. But there is issues out there, and we are seeing some of that rotation, out of these high flying momentum names, and that does, even if that is a bull market, ultimately a bull market thing, rotation can be painful at times. So again, right now, I talked about 6,700 over and over. Last week I said we held that, so that was good, and we're right on it again. So this is the big area. Bulls want to see this hold. Otherwise, I think we can go down and test that 100 moving average there on the cash S&P. QQQ, down 2 points today. Nothing terrible, but again, hitting the 50 MA. IWM all the way down to the 100. So that's leading the race to the downside, and that has reconnected with the weekly 20 moving average. The Dow has outperformed a little bit relatively, and again, you're seeing that rotation into defense, right? Out of small caps, out of tech, into defensive names. Keep an eye on the semiconductors. We have Nvidia earnings this week. That will also coincide with a fresh VIX contract too, so possibly some volatility coming later in the week. Don't forget we have OPEX for the month of November as well on Friday, so we might see a choppy week here overall. And I think the best chance for bulls here to hold up is the fact that we have that big expiry. It's very odd to see a big decline during an options X week, but the week following can bring some volatility for sure. IGV, again, down to the 200 moving average. Nice gap into that on Friday. Nice rebound there. So I would say bounce is likely, but just keep in mind that bull flag at the all-time high failed. So be careful here. That signals institutional selling. Transports were strong early in the week, but it came back in last couple of days. And again, this keeps fake breakdown, fake breakout, fake breakdown, fake breakout. It just can't make up its mind here. But still in this tight range, and we'll see what happens here. I mean, you got a wide range here on the transports. They haven't really given us much alpha though. TLT continues to be very disappointing, even in risk-off environment. It has not offered much, and that's been the case for years now. So bounce there. We mentioned the 2-year already. XHP lower lows. Watch this though. Keep an eye on, there might be some sort of, maybe a swing trade here. I'm going to keep an eye on this. We're starting to watch maybe a falling wedge there. So maybe a sweep of 100 could give you an entry. We'll have to watch that this week. This will just be a quick bounce type play. It has lost the 200 day, so just be aware of that. And you have that bear inside bar there. But there is a big breakout bar and a pivot low right there just below 100, so I would watch that for a reaction here. Maybe a quick play. IYR, range week last week, nothing going on there. We mentioned the banks here. XLF, got to hold this trend line here. You got the 200 below that. KRE, regional banks, possible bear flag breakdown. And broker dealers, again, like we said, that might be 200 moving average bound. In fact, that's actually not bad because, like this was your breakout here, never got back tested. So right in that area, we'll just call it 925 to 950, I think could be a good area of support on XBD. Oil got slammed on Wednesday, but it did rebound into the end of the week, and it's up today. So it continues to hang in there. It's got to clear 60-20 though. And then you can maybe get a squeeze going. I know there's a lot of shorts in this. There's definitely a lot of fuel. I would have thought this would have broken out last week though, when we had that pop, and it just couldn't get it going. So it is tight, it is coiled. We're just waiting for a move. What I do love about oil here is the equities are strong, right? A little bit of red today, but nothing terrible. Look at on Friday and Thursday, just right at the highs. There's XLE, XOP, and OIH. They're holding the gains, right? Even as oil has been on, at the lower end of the range. The oil equities are holding up. That's a signal of money flow and rotation. So good to see those things. Dollar index backed off as expected. We hit the 200, we backed off. This has room for a higher low. And again, another thing to add to the pile of liquidity issues, look at the dollar yen. That's 155. That was the last time where the BOJ had to step in, or just after that. Now, I'm going to butcher the name. Sine is a dove, a mega dove. So there is maybe a little bit more wiggle room here to the upside before they have to step in. But nonetheless, we're starting to get into the red zone here on dollar yen. that can be problematic for tech. Problematic as in forced selling, forced deleveraging. Gold here retesting 4,200 like we figured. This might be a lower high right now, and that's fine. Again, this is at a huge move. I think it just needs to digest. And this might take some time. It's not going to be overnight, right? Look at the last, run up in 2024. It took like 4 months. Breakout again. You had to go sideways here. You went sideways for 4 or 5 months here. So I don't think there's any need to jump the gun right now. It's still in a nice range here. Silver made a new high last week, but no follow through. So that did back off. We'll look at 48 or so as support here in the short term. Platinum, little fake break of this little wedge, but it's holding the lower line. So if it can break back above, I think it can push higher. This new contract roll always messes up my trend lines, but yeah, this can still resolve higher, and palladium can as well. Copper, kind of a quiet week. It's dipping today. As long as it's, I think this looks good here. As long as it's just coiling up in this range with these tight candles, this has room to resolve higher. The other issue here, liquidity-wise, is we're seeing money come out of crypto. Bitcoin here coming to 90,000 as I'm doing this here, 92.6. It's right at the lows of the day currently. We're losing this trend line here. Now, I will say, if you know my methodology and rules, I love the third hit of a trend line being an overshoot. So sometimes you can get a very good rebound here, and you are seeing a little bit of panic start to set in this. So I think we'll get a tradable low here, maybe a pierce of 90. That's certainly on my radar, but this is definitely leading to the downside, right? Ethereum, same thing. Could be looking at 27, 28 soon. I think these are tradable levels, but they are leading to the downside, so that is a point of concern. Again, 6,700 on the S&P, big level here this week, and bulls will want to hold that. Break of that is problematic moving forward. So with that said, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com, and we'll see you guys all next week.